lines. But let's get in Seth Freeman of EM Capital Management, who joins us this morning. Hi, Seth. Thanks so much for joining in early this morning in India. It'll be rather late for you, I think. What's your take post those statements? More or less on expected lines? And also, do you expect India to get some part of the flows? In the past, you've maintained that for majority of 2015, you expect foreign flows to come into India. That's not really happened, at least for the last couple of months. Now you believe that money will slowly trickle back into India?
Well, at the least, this minor rate increase today takes away the need to continue speculating about if and when. And investors always do like some certainty. So this is a plus towards the certainty column. And I think that these, the comment coming out of the Fed today were important, in particular, that this was a unanimous decision. I think that's a very good sign from a policy standpoint and a recognition that maybe it wasn't so urgent to do now, but recognizing that the effects of policy change have a time lag involved. So I think that this should be good for investors looking at emerging markets, absent the fact that this puts pressure on foreign currencies.
Okay, positive for emerging markets as the uncertainty ebbs away. But what about markets like the US? We saw them rally yesterday, 1.5%. Do you think the rally continues from here on, or is it factored in?
Well, it depends what you call a rally. I think we're going to see some pretty modest gains going forward, but the big bogey will be waiting to see really towards the middle of next quarter how Q4 numbers are looking. At the beginning, some of the traditional companies that do well in Q4, particularly the retailers, the big chains in the U.S., were giving pretty dull forecasts. So I think that all eyes are going to be on earnings.
All right, Seth, there's some talk that maybe, in fact, the bond markets, they are factoring in only around 2 hikes coming in 2016. Do you buy that argument, or do you believe they'll go the full haul and they'll go ahead and hike rates 4 times in 2016, as has been guided?
I think it depends how inflation goes. I would imagine that because of low oil prices that are expected to be sustained at these low prices, if not lower, that we're probably going to see steady increases over 2016. Maybe there'll be a pause, but my guess is just 2 increases won't be enough. One of the problems we've had here is very severe inflation in residential real estate prices, which has been fueled by extremely low interest rates. There's going to need to be, in a way, a kind of a shock to keep those prices under check. On the other hand, I know the Fed would be very concerned about causing mortgage prices to rise too abruptly.
Seth, what about the Indian currency? It hit that 67 mark against the dollar yesterday. You spoke about perhaps some stress or some movement in the foreign currencies because of what's happened. What's the way forward? What can we expect?
Yeah, I have a lot of concern about that. When I took my first trip to India, I think there was 45 rupees to 1. And so we've seen quite a lot of depreciation over the last 10 years. I think this puts quite a bit of pressure on the Indian authorities and Mr. Jaitley in terms of looking at reducing interest rates in India. Reduced rates are great for the domestic economy, but that could put even more pressure on the rupee compared to the dollar. On the other hand, of course, this is a great time for Indian exporters to try to generate much higher volumes now that goods from India are becoming less expensive.
Do you foresee more pressure on the Indian currency from current levels? And if yes, by how much?
I can't tell you how much, but I would expect the Indian rupee to continue depreciating through 2016.
We'll be hoping that exports actually pick up, because we got some data yesterday. And in fact, currently exports data that we got just for the last month was at a fresh 5-year low. But Seth, one final question from my end. You said you're positive on the Nifty going ahead. Could you tell us some kind of targets, maybe in the next 1 year, or do you expect a 10% increase? Maybe, in fact, we could see a 15% rise. What's your take? Because you've corrected a good 15% from the top.
Well, again, if we're looking at U.S. dollar terms, you know, the index has taken a hit for us who have to price our portfolios in dollars. But there's no reason for the Nifty or the BSE 30, the Sensex, to slow down. And I would actually expect to see a 10 to 15% increase, again, based on consumption. And frankly, if infrastructure starts to finally get funded and take off in 2016, that's going to create a lot of jobs and a lot of spending.
Okay, Seth, we'll leave it at that. Thanks so much for joining in.